Today's number? 60. That is the percentage of Americans who say they have had a paranormal experience. These are events that involve visions of ghosts and, in some cases, demons. In fact, I had one last night when I watched Fox and Friends. Welcome to Prof G Markets. I'm Ed Elson. It is December 16th. Let's check in on yesterday's market vitals. The major indices fell ahead of the jobs report, which will be out this morning. Bitcoin dropped back below $86,000. Broadcom suffered its worst three-day sell-off since 2020. And finally, Tesla closed at a high for the year after Elon Musk confirmed that the company is testing driverless robotaxis in Austin. Okay, what else is happening? Oracle stock has taken a serious tumble since last week's earnings miss. The stock fell roughly 11% on Thursday following their quarterly report in which revenue fell short and it raised its CapEx guidance again. Shares then dropped another 5% on Friday after Bloomberg reported that Oracle has delayed completion of OpenAI-related data centers, and the stock fell another 3% yesterday as shares remained under pressure. All told, Oracle is off 40% from its September peak. So, here to help us make sense of what is happening to Oracle right now, we're speaking with Gil Luria, Head of Technology Research at D.A. Davidson. Gil, good to see you back on the show.
Good to see you. Thanks for having me.
Oracle reports earnings on Thursday, misses on revenue, not a huge miss, but then what we're seeing is a pretty phenomenal reaction, down 11% on Thursday, then it keeps on sliding again after the weekend. What are investors most concerned about right now?
Well, Oracle was put in a precarious position by OpenAI. 3 months ago, OpenAI promised them, we're going to spend $300 billion with you over the next 5 years. And at the time, that was OpenAI's biggest commitment, and it looked like it was going to come to fruition. And at the time, it even looked like Oracle had won that over all the other possible providers of data center capacity. But what we found out in the subsequent couple of months is that OpenAI was making a lot of commitments to a lot of companies, $1.4 trillion in total, which at some point we all realized they didn't actually intend to live up to. And so here's Oracle. They need to borrow a lot of money to build a lot of data centers to serve this contract that may or may not materialize. But they have a contract, so they can't say they don't have that. So here they are, they show up on Thursday and say, we have $523 billion of remaining performance obligations, in spite of the fact that we all know that $300 billion of that is from one company that may or may not end up spending that. So Oracle is in this tough situation because they already have a leveraged balance sheet. They need to borrow more money. And they got on the call on Thursday and said, well, we intend to keep our investment grade rating. We intend to stay below a 3.5 debt to EBITDA ratio, which they are already close to. And we're going to have to find creative solutions to do that. We're going to have vendors own the chips. We're going to have customers own the chips. We're going to postpone leases. So they got themselves into this really uncomfortable position where it's unclear how they can proceed moving forward, building for a customer that may not materialize.
Everything you just said there, this relationship with OpenAI, the fact that it's the majority of their future revenue is coming from this company. We don't know how much we can trust OpenAI. We are also looking at the leverage that Oracle is taking on. All of that stuff sounds like stuff we kind of already knew, or at least that most people generally had an understanding of. Mm-hmm. But it looks as if something happened or something changed people's minds with this earnings report. Is there something that made people believe all that maybe more strongly, or some number that particularly stood out to people?
A couple of things. So one thing is that you mentioned that they missed on revenue. And part of the reason they missed on revenue is they didn't live up to their obligations to build the data centers at the rate they had promised. And that's the premise of a company like Oracle or like CoreWeave, these neoclouds. The whole premise is, Microsoft, Amazon, Google, they can't build it fast enough. Come to us. we'll get it done. So when you have, and this happened to both of these companies over the last couple of weeks, and show up and say, actually, I can't get it done in time, then why are you there? So that's part of it. And the other thing that they have this window on Thursday to own up to what happened to them with OpenAI, to own up to the fact that they'd been played and say, look, there's 223 billion of remaining performance obligations from robust customers that we have 100% visibility into. And then there's another 300 billion that we hope to get, and we're working with OpenAI, but we have to discount that somehow to be more reasonable. And instead of doing that, they got entrenched in this notion that everything's fine. We can continue to borrow money, and we're going to continue to build data centers, and the customers are going to be there. Nothing to see here. I think that in itself caused unease.
Yeah. Just looking at their debt situation. So their long-term debt increased to $116 billion, up 44% from a year ago. But I think probably most interesting is what's happening in the credit default swap market, where the spreads on Oracle's credit default swaps have hit an all-time high. What does that tell us about Oracle's situation? What does that say about investors' concerns about Oracle right now?
That even if they can access the debt markets, the cost of that debt has gone up a lot since last time they raised. Plus, we've now found out, because they slipped it into the 10Q on a Friday morning, that they have committed to 246 billion of operating leases. Above and beyond the 108 billion of debt, they now have added a colossal amount of operating. Now, mind you, that's over 15 years, but that's still a very big commitment. Add to that the activity in the CDS market, which tells us that their debt is now worth less than when they issued it. That means that next time they have to raise debt, it's going to be harder and more expensive, which again makes it harder to believe that they can build out the data centers at the rate that they need to live up to the obligations that they have made.
It really seems as though Oracle has become kind of the proxy for the whole AI bubble, or maybe the tracking stock for all of the concerns about AI. Everything you're describing, where you had this massive surge right after the OpenAI announcement, everyone gets very excited, went from 220 to 330 after that deal. We're back down to 185. We're down 40% from that peak, which is just extraordinary. I guess my question is, have we gone too far? I mean, if we were at 220, now down to, then yes, we had the rise, but now down to 185. I mean, people are less bullish and less excited about Oracle than they were even before the OpenAI announcement. What do you make of that? Is it possible, perhaps, that maybe they're overselling?
They still have to unwind the situation. Until they get out of this predicament, the stock is going to trade at a discount to their growth rate, which is now actually accelerated. And they were actually able to deliver a nice growth and growth expectations for next year. But until they get themselves out of this predicament, which will mean renegotiating with OpenAI to something more reasonable, investors are going to be very cautious about engaging with Oracle. Not to mention that, again, investors feel misled. Oracle was misled by OpenAI, and then Oracle misled investors. There's always a discount when you mislead investors, and that tends to linger for more than a couple of months. It could linger for a while investors regain their confidence in Oracle's leadership.
Just before we let you go, what does this say about OpenAI? I mean, OpenAI is a private company. We don't get to see the stock price moving up and down. But I mean, what we're really describing here is a crisis of faith in OpenAI, which bled into Oracle because of their relationship with each other. I mean, does this mean OpenAI, if it were trading, would be down like 50% at this point? I mean, it doesn't seem good for them.
Most likely, yes. And really, we're at a very critical juncture right now. What the company has said, what OpenAI has said is, by the end of the year, we're going to give you this plan for how we intend to get capital to fund all these endeavors that we've been talking about. Well, we're in the middle of December. within the next couple of weeks, we're going to find out how much OpenAI was able to raise. We know they've been on the road trying to raise capital. If they raise $5 billion or $10 billion, that's not nearly enough to pay for everything they've signed up for. But if they show up in a couple of weeks or even as early as tomorrow and tell us, we have $100 billion of capital lined up, equity, debt, government-backed, Saudis, Gulf states, SoftBank, then I think there's going to be a big relief in the entire sector. I suspect based on everything we've seen, we may have the first scenario, not the second scenario ahead of us over the next couple of weeks.
All right. Gil Luria, Head of Technology Research at D.A. Davidson. Gil, always good to see you.
Thank you.
We'll be right back. And if you're enjoying the show so far, be sure to like and subscribe to the Prof G Pod YouTube channel at the link below.
Support for this show comes from LinkedIn. If you've ever hired for your small business, you know how important it is to find the right person. That's why LinkedIn Jobs is stepping things up with their new AI assistant, so you can feel confident you're finding top talent that you can't find anywhere else. And those great candidates you're looking for are already on LinkedIn. In fact, according to their data, employees hired through LinkedIn are 30% more likely to stick around for at least a year compared to those hired through the leading competitor. That's a big deal when every hire counts. With LinkedIn Jobs AI Assistant, you can skip confusing steps in recruiting jargon. It filters through applicants based on criteria you've set for your role and surfaces only the best matches so you're not stuck sorting through a mountain of resumes. LinkedIn Jobs AI Assistant can even suggest 25 great fit candidates daily so you can invite them to apply and keep things moving. Hire right the first time. Post your job for free at linkedin.com/markets. Then promote it to use LinkedIn Jobs' new AI assistant, making it easier and faster to find top candidates. That's linkedin.com/markets to post your job for free. Terms and conditions apply.
We're back with Prof G Markets. President Trump just signed an executive order aimed at blocking state AI laws. This year alone, every state has introduced AI legislation and 38 states have already passed 100 laws. Now the idea is to replace this patchwork of state laws with one national framework. So what does Trump's order actually do to accomplish that? How far can it go? Okay, here to discuss this, we are speaking with Helen Toner, Executive Director at Georgetown's Center for Security and Emerging Technology. She will break it down for us. Helen, thank you for joining us on Prof G Markets.
It's a pleasure to be here.
So Trump signed this executive order on Thursday. Basically, the idea is we're going to regulate AI not at the state level, but from Washington. Let's just start with your initial reactions to this move.
It's been really interesting to watch the play-by-play here. So this is not the first move. The Trump administration did not do this out of the blue. Earlier this year, there was an attempt to pass preemption as part of the One Big Beautiful Bill. So preemption being, the federal government stepping in, saying, we have rules, the rules we have are going to preempt anything that the states do. So you have to follow the federal law and not state law. They attempted to do that with One Big Beautiful Bill. The trick being that they didn't actually have anything. There were no federal rules, right? It wasn't, here's the rules for how to sell such and such, and now all the state laws don't apply. Instead, it was, there's no rules, and also states aren't allowed to make rules. And that turned out to not be very popular in the Big Beautiful Bill discussions and ended up going down in a Senate vote of 99-1. They then took another stab with the NDAA, National Defense Authorization Act. This is a must-pass defense funding bill. That also failed in Congress. And while it's unusual to, preempt state law with nothing to replace the state law, they did at least go through Congress in both of those attempts. They were trying to say, let's do this the way that you're supposed to do it. The federal Congress passes a law that overrides the state laws. What the executive order from last week did was really trying to do an end run around Congress instead. So it has several different sections in there, each of which is sort of on its face something that the executive branch can do, that the president can, require of government agencies, but that altogether, when you put them together, are trying to do something which the executive branch really can't do, which is pass a law to preempt state laws on AI. So it's really trying to intimidate states. It's trying to threaten legal action against them, but it's all going to come down to messy court fights and, do they get access to federal funding and things like that.
When I look at what he's done here, it's hard for me to think that this wasn't a result of the hundreds of millions of dollars of lobbying spend that was coming from these AI companies and the fact that David Sachs is in there, who obviously has been reported frequently is an investor in many of these AI companies. But I just want to push all of that aside, because the question of should we regulate AI at the state level or at the federal level, I think is actually a fair question.
Absolutely.
What do you think? How should we be regulating AI?
I think there's no one approach that's going to be enough to regulate AI as a whole, because AI is so many different things. So I think we need to be thinking differently about how are we regulating AI in education? How are we regulating AI in the military? How are we regulating AI in all kinds of other places? So if you look at bills that states have passed, many states have passed bills about how the state government uses AI. That seems like something that you really want to regulate at the state level, right? Alabama decides how the Alabama government should use AI and so on. Other things, like some of the more sort of national security focused issues, maybe there is actually a strong case for that being something the federal government should regulate. But then you see states in this position of, okay, these issues are moving fast. Companies are warning us that these threats might materialize in the next year or in the next, 2 to 3 years. If you're looking at U.S. Congress in Washington, D.C., it's pretty clear that they're very unlikely to regulate on those issues anytime soon. So what do you do with those issues where it's not actually obvious that the states are the right place to regulate it, but it is obvious that federally, we're not going to regulate? Do you then say we should tie the states' hands and they shouldn't be allowed to do anything while DC goes ahead and does nothing? And that's, I think, where you have some legitimate disagreement. Personally, I tend to think that, the laboratory of democracy idea is valuable and is a sort of foundational principle of how the United States works. And so even in those cases, you would want to have the states able to take a stab at it.
I just want to read you a quote from Trump. He said, following this executive order, he said, "We have to be unified." He said, quote, "China has one vote because they have one vote, and that's President Xi. He says, do it, and that's the end of that." Basically saying that's a good system. I just want to get your reactions to that quote, because, in a lot of ways, you could argue he's right, and that is China has the ability to just make things happen. The executive order comes in. He has basically total 100% executive authority, which allows them to get stuff done quickly and pretty aggressively. We have a system of democracy which slows things down. He's basically saying he doesn't like that system. What are your reactions to that quote?
I mean, I have to prevent myself from getting sidetracked. I'm somewhat of a scholar of Chinese science and technology and their regulation. And, my mind immediately goes to, well, actually, you have the Cyberspace Administration of China, and there are kind of, there's tensions with the Ministry of Science and Technology, and then the companies are kind of pushing back. So in China, I think it's not quite that simple.
Fair enough.
But of course, it is an authoritarian system, and Xi Jinping does wield an enormous amount of power. So point taken. Yeah, I mean, I think it's just fascinating to see this from the leader of the party that for so long has protected states' rights and has understood the importance of that and has fought for it in so many other settings. And I mean, you are seeing plenty of Republicans reacting to both the two initial pushes in Congress to preempt state AI laws and also this executive order. They are pushing back on it. They are defending states' rights, but of course, the CO has now gone through, and the federal government is going to move to execute on it. So it's not clear to me what Republicans in Congress can do about that at this point.
Just before we let you go here, I mean, the politics of AI, this is increasingly becoming a political issue. How we regulate AI, who stands to benefit from AI, et cetera. And what we continually see in the data and the polling is that Americans do not like AI, increasingly so. And so it does seem striking that Trump, who does present himself as something of a populist, he wants to go with whatever the most popular answer is seemingly taking the other side of this. He seems to be siding with Silicon Valley in a lot of ways, and he wants to let AI run kind of unregulated. I'm just interested to get your reactions on how this might play out over the next year or so. And does this executive order basically just mean he's siding with the tech bros? And how will the nation react to that?
I think it's the right question. I think it's really striking at whatever polling you look at how negative public sentiment about AI is. In some ways, I think too negative. People are very negative on self-driving cars, for example, which I think are an incredible technology when you look at the safety data and how many lives from traffic deaths could be saved. But I think the tech companies really need to get realistic with themselves about where the public is at on this technology and how do you I see tremendous potential in AI. The tech companies see it too. How do you start to deliver on that and show people a positive vision? I think banning state legislatures from creating any rules or, putting any safety guardrails on is not how you create that confidence. So I definitely think there's a chance that we'll see significant backlash to AI over the next few years, and this certainly isn't going to help prevent that.
Helen Toner, Executive Director at Georgetown Center for Security and Emerging Technology. Helen, thank you very much for joining us. Appreciate your time.
Thanks, Ed.
We'll be right back. And if you're enjoying the show so far, be sure to like and subscribe to the Prof G Pod YouTube channel at the link below.
Support for the show comes from Grüns. The holidays are a time to indulge, but even if you're eating more than you typically do, you might not be getting the nutrients you actually need to end the year on a high note. Grüns may be able to help you fill the nutritional gaps so that you can enjoy it all guilt-free. Grüns is a convenient, comprehensive formula packed into a tasty little pack of gummies. This isn't a multivitamin or greens gummy or a prebiotic. It's all of those things and then some at a fraction of the price. And bonus, it tastes great. Every Grüns snack pack is filled with 6 grams of prebiotic fiber, which is more than what you get in 2 cups of broccoli. Plus, Grüns are nut, gluten, and dairy-free, vegan, include no artificial flavors or colors, and are backed by over 35,000 research publications. Don't let the holiday travel, hosting, parties, and late nights set you back. Give yourself a little extra support so you can enjoy all the holidays' magic. Get up to 52% off with code MARKETS at Grüns.co. That's code MARKETS at GRUNS.co.
We're back with Prof G Markets. Before we end, we wanted to give you a quick update on a stock that we highlighted a couple of months ago. You might remember the company Fermi, which is an AI data center company that IPO'd in October at $19 billion. And you also might remember what we said about Fermi. We said that it was a, quote, shit show of a company. We pointed out that it would likely be the, quote, worst IPO of the year. And we said that ultimately the stock would come crashing down. But I just want to be very clear here. This is not going to end well, and I will lock that prediction in right now. Ultimately, as we have seen time after time, gravity will hit. Gravity must hit. And this thing will have to come down. Well, here is our update. The crash came sooner than we thought. As of today, Fermi stock is down almost 75% in just a couple of months since it went public. The company is now worth around $5.5 billion. And the reason the stock collapsed is really because of what we said, and that is the revenue that it had promised is not really showing up. More specifically, last week, one of their first customers, a company that had planned to rent compute from Fermi for $150 million, that customer pulled out of their purchase agreement. Supposedly there was some disagreement or a fight over the terms, and it led to just a termination of the entire relationship. Now, to be fair to Fermi, $150 million actually isn't all that much. I mean, they burned about $350 million last quarter alone. They would argue that they're, thinking bigger than these numbers. The problem isn't the number, though. The problem is what it says. It's the fact that one of the only contracts for a company that hasn't proven itself in any capacity, the fact that that has fallen through just a few months after they debuted, that is a sign. And it is a sign, as we proposed on the show, that perhaps these guys don't really know what they're doing. Perhaps they saw this buzz around AI and data centers and nuclear, and they went out, they built a fancy deck, they made some spreadsheets. Rick Perry came along and they raised a bunch of money. But that tells you nothing about their ability to actually execute and generate business, to actually turn these promises into reality. And what we know about this company is that they haven't executed anything. They haven't built anything. They haven't signed a single tenant. They have no profits. And most importantly, as we highlighted, they still have no revenue. So it appears that Wall Street is beginning to come around on these issues. The stock's down nearly 75%. We predicted this would be something of a disaster. If you want our full analysis, I would encourage you to go check out our episode from October 1st, where we lay out all of the issues with the company. But it does appear that the disaster is now playing out. The only wrinkle, it happened a lot sooner than we thought. Thanks for listening to Prof G Markets from Prof G Media. If you liked what you heard, subscribe to our YouTube channel and tune in tomorrow for more.